Bien chicos, buenas tardes, ¿cómo están? Espero que todos estén muy bien el día de hoy. Bien chicos, ¿cómo están? ¿Cómo están? ¿Cómo están? Quisiera saber si me están escuchando muy bien. Bien chicos, excelente que me escuchen bien. Bien, iniciemos y veamos por supuesto lo que puede venir para la economía en estos momentos. Estamos todos a la expectativa de la conferencia que veremos ahorita en un par de minutos a través de Bloomberg sobre, en este caso, las decisiones de los tipos de interés. Vale, en este caso pues sabemos que es muy probable que la Fed suba, en este caso, las tasas de interés, dado pues los altos riesgos de la inflación. Es muy probable que en los Estados Unidos la inflación suba de 8.5 a 8.6 posiblemente. Y si esto pasase, pues necesitaríamos en este caso un movimiento mucho más fuerte en temas de inflación, en temas de movimientos en los mercados, ¿vale? Veamos las gráficas que vimos. En esos momentos la inflación se ubica en 8.1% versus otro tipo de días o meses anteriores. 8.2 para septiembre, 8.3 para agosto, su pico más alto junio con 9.1%, inflación interanual de la misma manera en Colombia. Sin embargo, pues en septiembre se ubicó en el 11.4%, ¿vale? ¿Qué estamos viendo nosotros entonces en estos momentos? Pues existirá posiblemente problemas con respecto a la inflación. La Fed busca proteger todo esto o la economía como tal a los consumidores, evitando un alza en la inflacionaria. Sin embargo, se habla que el próximo año, 2022 y 2023, puede hacer que exista, puede ser que exista, perdón, puede ser que exista una hiperinflación en los próximos años. Todo va a depender netamente de la economía, cómo está pasando en estos momentos y por supuesto el índice de confianza del consumidor. Pues sabemos que el consumidor final es el que hablará principalmente, o es el agente con mayor inmediatez dentro de los movimientos de los mercados, ¿vale? Vamos a conectarnos en esos movimientos con Bloomberg. Vamos a ver qué nos dicen ellos, qué conferencia dan, y obviamente estamos atentos en que si la Reserva Federal anuncie el alza, y de esa manera pues nos enfocaremos en operar en este caso los mercados de Forex. Recuerde que son mercados netamente educativos y pues esos son simplemente ideas de negocios que nosotros podemos tener, ¿vale? Entonces vamos a buscar la operativa con el euro libra dólar, y también pues lo vamos a tomar con el famoso DXY. Vale, vamos a ir viendo también lo que pasa aquí con el CDXD. A ver a dónde puede llegar posiblemente el precio a atacar y posiblemente podamos tomar. Que si dijimos, chicos, posiblemente vamos a tomar unas posiciones de compra cerca de esta zona. Obviamente de XY no vamos a comprar. Entraríamos simplemente una especulación hacia una venta. De esta manera también sería esta posición. Esta sería la posición que nosotros vamos a buscar para el USDJPI, ¿vale? Y esta pues la que vamos a tomar para el de XY. Si nos cumplen, chicos, salimos bien profit. Vamos a estar muy atentos. Ya en 15 minutos posiblemente este anuncio en estos momentos. Es muy probable que suban en 75 puntos básicos. Aquí está. Report Special. Muy probable, chicos, que la Fed suba a 75 puntos básicos. A 75 puntos básicos su política monetaria, ¿vale? Vamos a estar muy atentos. Vamos a ir conectando con Bloomberg.
Look, I think it's risk to the upside on inflation because inflation now, we see the employment cost index, for example, a very good example, is now running at 5%. Adjust for some productivity, that means underlying inflation is somewhere in the mid-threes at best. So the Fed has work to do and really the most difficult disinflation assignment really since the 1980s. And so what I think of as the plausible best case scenario, by about a year from now on a year-over-year basis, inflation is below 3, but a lot has to happen for that to play out.
Rich, policymakers always talk about the balance of risks, about the outlook and the next policy move. One thing we've heard from this Federal Reserve, repeatedly in fact, from several officials, and it's in the minutes from the last meeting, is that the risk of doing too little outweighs the risk of doing too much. Is that still your assessment of things as you look at a set interest rates if you were back on that committee today?
Yeah, it is, John. It is my assessment because history has shown, this is not just an academic exercise, history has shown that if central banks don't have credibility and they are not able to over time achieve price stability, the cost of the economy are significant, and ultimately that inflation, the cost of bringing down inflation is higher. So absolutely, I am very much, if I were on the committee, I would be articulating that view, which might not make me popular with everybody, but it's what I believe.
En ese caso, pues lo que nos están hablando hasta este momento ha sido pues como la inflación. Se entiende que es uno de las plagas, si lo podemos llamar, o algo que afectará directamente a la economía. Justamente la Fed lo que busca es controlar todo ese tipo de puntos o inflación con el fin de no afectar la canasta.
Because in retrospect, all of us sort of got lulled in the great moderation from, say, the mid-90s until the global pandemic collapse. In a good year, inflation was running at 2.1 or 2, and in a soft year 1.8, 1.6, and so we all got used to very little volatility in inflation, and it is something of a shock and a wake-up call to have to look at the uncertainty, but it is a fact of life. Now look, it's not just in the U.S. We see a similar dynamic in the UK, Canada, the Eurozone, Australia. So for a variety of reasons, and I think not coincidentally, due to the shutdown, the pandemic, the reopening, and now what's going on in Ukraine, there are big shocks hitting these economies, but unfortunately they're all moving in the same direction, and they're moving inflation up into levels that nobody likes.
Mr. Clarence, a lot of people are looking back at other bouts of strong inflation. Originally, it was back to the 60s, maybe, Walter Heller and all that. But more and more people look back to the stochastic moments of the 40s into the early 1950s.
Yeah.
Do you have an enthusiasm? Do you have a belief that once the trend moves, it will move quickly to disinflation?
Well, I do think once we start to see this in the labor market, yes, I think it can be quite quick. And indeed, if you look at past cycles, wage inflation in both the early 2000s and after the global pandemic global financial crisis, wage inflation actually fell pretty substantially once the economy slowed. In terms of your analogies, actually, sometimes I like to think about, whether or not this is more like 1951 or 1966. I wasn't around for 1951, but if you look at the data, for example, in the U.S., we had a supply shock, we had a demand shock, Korean War inflation went up to 10, and then the next year was at 1%. So we can have rapid disinflations.
Rich, I was on the back end of Eisenhower in
Bien, estamos ahí
1951.
atentos, apenas están hablando sobre pues obviamente los efectos que ha tenido la inflación en los últimos tiempos. Miren cómo el índice del dólar viene disminuyendo y pues se está fortaleciendo en este caso pues el GBP USD que está yendo hacia el alza, ¿vale? Estamos muy atentos a lo que más nos puede dar los mercados.
We're about 8 minutes away from this one, Priya. What are you looking for in the statement and in the news conference from Chair Powell a little bit later?
En estos momentos
So one word, optionality. I think all we can
están
get from
allí
a Fed
chicos
meeting typically is a sense of the reaction
hablando por
function.
supuesto
It's a data-dependent Fed. They've dropped forward
la
guidance. I mean,
decisión de
we're
la
looking for that
FOMC.
75 basis point hike. That's priced in. It's all about December going
Escuchemos.
forward. And can we get a sense of the threshold of at what point do they slow down the pace of hikes? At what point does the Fed stop hiking? And then at some point, at what point do they start to ease? I think if we get a sense of thresholds, or is the Fed stepping away from front-loading? I mean, we've been hearing loud and clear that they're in a front-loading mode, which is code word for 75. Are they about to drop front-loading? The data hasn't
Miren en ese
cooperated
caso
and they
como
don't
los
have a dot
bonos
plot.
han
So I think it's
venido
a really
cayendo en estos
tricky
momentos.
balancing act for Chair Powell to deliver
El
the
bono de 2 años,
75,
bono de 10
say
años,
that
bono de
inflation
5
commitment
años,
is still very
dado
much
las
front and
consecuencias
center
de la
for the
inflación
Fed.
que se
But
tiene.
that they could slow down
Por
to
otro lado,
a
pues está
potentially
mostrando
higher
el
endpoint.
comportamiento
So
de
to
las
invoke like the
divisas
higher
mayores o
upside
de
risk
divisas
to
menores
terminal
también
rate.
que se
I think
tienen.
that might be one way
Miren
we
en
can try
este
and
caso
message
como
a
el
slower
bono de
pace,
10
but a
años
potentially higher
está por
endpoint. I think
debajo de
that's really, it's a tricky one, but
4.02.
I think they deliver
Sin
the
embargo,
one
en este
hike
momento se
and the
encuentra
75
subiendo.
hike and then talk about continued hikes.
Priya, what's a bigger danger for this Federal Reserve? That they signal an overly hawkish or an overly dovish message from a market's perspective and how the market responds?
Sure. So I think the market is desperate for a pivot. Pivot, swivel, you call it whatever. The market is desperate for any sign of a downshift. Because I think the market has viewed the pace and the endpoint as intricately linked, which I think they're not. And the two, maybe it's a nuanced message, maybe very hard without a dot plot. But I think any hint that they talk about long and variable lags, or we've done a lot, or look how much the 10-year has risen, and we can slow down, I think the market's going to run with the idea that the Fed is downshifting, that financial conditions can ease, and then we'll get the Fed coming out over the next few weeks trying to, reset the message. So I think the risk is that any sign will be viewed in sort of a dovish sense.
I want to get to Richard Clarida on this. Hey, Rich, when you were putting together the statement back in the day and you're all around the table, did you have this kind of conversation? Did someone say, you know what, someone's going to think, though, Rich, someone's going to think that's a pivot. They're going to think it means X, Y, Z. We need to change it. We need to change the word. Lloyd Blankfein was talking about getting out a thesaurus over at the Federal Reserve and going through a list of words that might be more effective. How did it actually work, Rich, when you put this stuff together?
Well,
Bien, estemos atentos,
the short
chicos.
answer
En 6 minutos sacarán los
the chair
reportes.
and the committee are very focused on making sure that communication conveys not only the
Recuerden
sense
que
of the meeting,
normalmente
but
los
the
mercados
sense
se
of where
mueven
they are going.
en algún punto
I and others would weigh in on how different
tendrán
wording
un
and
tipo de
different
reacción.
communication
Puede ser
would be
inmediatamente,
interpreted,
puede
and
ser
certainly did our best
algo tardío.
to have it aligned
Debemos
with the
estar ahí
message that we
atentos a
wanted
lo
to
que nos
communicate.
vayan dando los
Yes.
mercados.
Dr. Clarida, I was shocked, as I think John Farrow was, at the quality of the letter from the progressives, the liberals in Congress, led by Senator Warren of the Commonwealth of Massachusetts, and she did cite you for a single mandate. It was 7 cogent questions, properly footnoted. It looked like a graduate paper, maybe in Columbia. With that said, how does the Fed receive a letter like that from politicians? What do you actually do when you get a smart note, as you did from Warren, Sanders, and company?
Well, I mean, I won't speak about this particular case, but of course, Federal Reserve officials and certainly the chair get correspondence all the time, and including from members of Congress and the relevant committees. And I have every confidence that they will respond promptly and thoroughly to the letter.
to get inflation down means to get nominal GDP down. I spoke to Michael Darda, so good on this earlier today.
Mike's great.
And we are nowhere, Richard Clarida, near what I'm going to call normal nominal GDP. And the proportion now is we need to do a lot of work
Bien,
on
estamos ahí
inflation.
atentos.
Is real GDP,
Se
particularly
acercan
domestic
los
final sales,
movimientos,
is
miren cómo los
quiescent.
precios
How do we
comienzan
get
aquí a
that
posicionarse,
down
ver
more
las
rapidly?
mitigaciones
Is it
que
to
están
crush
haciendo y cómo
the
los precios
housing
se están
market? What's the
regresando.
strategy to bring it down besides a blunt
Vamos a estar muy
instrument
atentos
of a
en
rate
dónde podemos
increase?
comprar, en dónde podemos vender.
The instruments are blunt, and it would be great if the Fed had surgical tools, but it does not. It's basically tightened conditions through higher rates and letting the balance sheet run off. In terms of nominal GDP, it has certainly stepped down from the eye-popping pace. I think last year nominal GDP growth grew 12%, and obviously not consistent with the 2% inflation. It is downshifting. In fact,
En 3
this year
minutos,
we've
chicos,
seen a
sacarán la
slowdown in
noticia, el
nominal private
reporte.
sector demand growth. The
Vamos a ver
GDP
si
growth we've had has really
posiblemente nos
been,
tomamos una posición en largos
bobbing around with inventories
de
and
nomás
trade.
mayor un riesgo
The Fed's tighter
de
financial
11
conditions
pips.
have yet to really fully kick in. Most of the
Puede ser por una
slowdown this
posible
year in
compra.
growth has been coming from what I call the sticker shock of higher prices crushing up against nominal income growth that's not keeping pace.
Priya, I've got a couple of minutes on the clock, and Priya Misra, you usually give us a trade going into the decision and through the news conference too. What's that trade today, Priya?
Cerca de
I think the market
1.46.600.
really
Vamos
wants
a
to
ver.
see that pivot, so it's a short-term steepener, but I would say use this opportunity to re-establish flatness. I mean, I know the curve is inverted, but if the Fed is serious about inflation, and we think inflation is broad-based, sticky, I mean, even if it comes down, it's at 8%. Does it stabilize at 4%, which is much too high? I think the risks are to the front end of the Treasury curve staying high, the long end actually looking attractive. So I think more cuts should be priced into 24. We have only 100 basis points of cuts priced in. I think a recession is almost a done deal by the end of next year. So maybe it's not next year, but in 24 when the Fed starts to cut, I think they're going to have to cut a lot. So buying further out the curve, having flatness on, it just may not be a 2 to 3 p.m.
Vamos a entrar también a la
because
página
I think the market's
directamente de
going to
la Fed.
grasp anything that
Si
sounds
es
somewhat
posible ver
like
la
a dovish
transmisión de
pivot.
ellos en
Can't wait
vivo.
for this news conference. Priya Misra, just wonderful as always. And to you, Rich. Thank you, sir. The former Fed Vice Chair,
Thanks.
Richard Clarida. Your equity market shaping up as follows then, going into this one. The equity market down about 1/3 on the S&P. In the bond market on a 10-year yield lower by about a basis point, just north of 4% there. What did you say then, Lisa? What did Priya say? They're going to cling to anything in the news conference, anything at all that resembles some kind of pivot.
This market is desperate for a pivot or a swivel or whatever you want to call it. To
Pick
me,
a word, choose a word,
really,
any word.
and you ask, does Rich Clarida, discuss this and look at a thesaurus? Maybe they do. They try to get a communication right. But the fact that the market is so desperate for a pivot highlights that they think that that's actually going to be some sort of rallying signal rather than a sign that the pain is that much more entrenched, which speaks to what Mohammed El-Arian is saying, is that perhaps the pressure is to stop too early.
Mohammed agrees with Clarida on this point, Tom, that at the moment the risk of doing too little still outweighs the risk of doing too much.
I agree.
There's many people, though, finding weakness in this economy, pushing back against that particular view. I believe Larry Summers on board with that view too.
And you could take Professor Summers and Professor Clarida and Professor El-Arian, and you can combine them into a lot of antiquity there, and they remember that societies survived with higher nominal rates and a legitimate higher real rate. A lot of people playing the game today have never really experienced that.
Bill Dudley on top of that story too. Here's the price action then, 14 seconds away in the equity market, down 1/3 on the S&P 500, down 0.7% on the Nasdaq, on the Russell, small caps negative 1.3% with your much anticipated Fed decision. Here's Mike McKee.
Straightforward, as anticipated, a 75 basis point increase in the overnight lending rate to a range of 3.25% to 4%. But they added 2 lines to the statement. Pay attention. This is important. Something for Wall Street to chew over. They adjusted the pledge that the committee anticipates ongoing increases in the target rates will be appropriate, adding, in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. And they added this sentence. In determining the pace of future increases in the target range, The committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects
¿Quién tomó la
economic
compra,
activity and
chicos?
inflation and economic and financial developments.
Mala mía,
No reference to any
mala
size
mía.
of
¿Quién
any
tomó la compra?
ongoing
¿Quién puede haber tomado la
increases. The
compra
rest
en
of the
esos
statement
momentos?
is identical to September, including the economic assessment that we have modest growth, robust job gains, and elevated inflation. Once again, Russia is blamed for its war's impact on inflation and global economic activity. There's no
Vale, chicos, ahí
statement,
podemos
no
también
mention of
posiblemente
anything to
tomar
do with
una
the
venta.
balance sheet, and the decision was unanimous. So, something for Wall Street to talk about, but nothing definitive yet. We'll wait for Jay Powell.
We're going to talk about that
No,
right
se
now. Mike McKee,
fue
thank you, sir.
toda.
And stand by. Your
Igual
equity
atentos,
market
no
rallying off
estamos
the back of those
fuera del
headlines,
mercado.
up by 0.4% on the S&P, the Nasdaq recovering just about unchanged on the session off the back of it. The front end of the yield curve dropping like a stone a little bit. We're down by about 7 basis points to 448 on a 2-year. Call it down 6 basis points at the moment. On a 10-year, we're down 5 basis points. With the yields lower, expect a weaker dollar. That's what you've got. Euro dollar spiking
Estamos ahí
higher up by
atentos,
0.6%. Euro dollar just short of parity, but
Wow,
still
tremendo,
climbing.
tremendo,
About
tremendo.
99.40, Tom, on euro dollar.
I wonder, John, if cumulative tightening, I love the
90
phrase, it reminds
pips
me
más
of my belt,
positivos.
but if you look at cumulative tightening, I wonder if that came from Vice Chairman
Subió
Brainerd.
súper
It's
arriba.
a beautiful phrase.
Well, it's off the back of the speech, isn't it?
Well, off this
From a number of
market with
weeks
the
ago.
Dow up 300
Sigue
points,
subiendo, para mí es muy
SPX
probable
up
que
28 points,
continúe hacia el
0.7%.
alza.
This is what, Lisa, this goes to the pivot discussion.
Yeah.
Do you pivot and sum the time series together?
There's some tension between two headlines here, Tom. On
Yes.
the one hand, they talk about the cumulative tightening and taking lags into account. On the other hand, they're still talking about ongoing hikes until rates are sufficiently restrictive. This has all been implied by the dot plot for a while. We're expecting another 50 basis point move in December. It's about how
Vale,
much further
chicos,
you go
tomen
from
una
there and
venta
how long
ahí
you stay
donde
there
estaba.
through 2023, particularly if the economy is weakening
Claro que la
around you.
venta
So
ya
the
la
first
teníamos
move
marcada.
off the back of these headlines is equities higher, yields lower, dollar weaker. Though, Brammer, when you get to the news conference, you wonder where the emphasis will be in the press conference, and that's ultimately what these news conferences are about. It's about where the emphasis will
¿Tomaron
be
la
from the
venta?
Fed chair. Which headline does he lean on? Just that little bit more.
And the fact that the market is rallying speaks to what Priya said, that basically this is a market desperate for that step down, and they're going to read into anything that he says as a step down, which is the reason why the comment that Michael McKee highlighted, it will take cumulative tightening and lags into account as they decide to raise rates. This really speaks to,
¿Tomaron la
John,
venta,
to that
chicos?
moment.
Tom, quite a moment. Hey, we look for the news conference in about 27 minutes, and looking forward to it, I've got to say.
It could be interesting to see Michael McKee with us here briefly into the conference. And Scott Miner joins now, Global CIO of Guggenheim. He's been
Qué
just wonderful
excelente.
with us over the many Fed meetings of this historic moment. Scott, there's
En
a
ese
new
momento que
phrase,
alcancé a entrar más o menos
cumulative
cerca de sus
tightening.
precios.
What does that signal to you?
Ese fue mi precio de entrada.
Well, I think it's a very artful way of the Fed getting off the hamster
Protejamos las
wheel of
inversiones.
75 basis points a meeting and not having to focus so much on, what is the rate change at the next meeting and what is the pace, but to say, hey, guys, we're going to do what we have to over whatever period of time to get us to, something that brings inflation down. So, Tom, you knew this we've seen this every meeting and between is, the debate about what's the pace and so on and so forth. I think they want that topic off the table and they want people to focus on the terminal rate.
And Scott, what's so important here, and I don't want to do a wonk fest here, but it reminds me of Roman Friedman at NYU, who is great about going out in time on the time continuum and aggregating all of the moves versus the screens, like the Three Stooges, inch by inch, step by step, whatever the line was
Vale,
from our
seguimos,
childhood.
chicos.
Scott Miner, is this a Fed now that will look at the sum of their actions rather than moving sequentially?
Yeah, I think so, Tom. I think they're going to basically, they know monetary policy affects the economy with the sort of a 12 to 18 month lag. And, they've been concerned about overdoing it. And I agree with you. I think that language came from the vice chair, is a very articulate way of being dovish without being dovish. And, and of course, I also agree the market the market wants something to rally on, and so therefore they're going to pick up on anything and think it's dovish.
Scott, would you fade this move? I can see in the short term, a lot of people might be saying, we're stepping down here. We're going from 75 to 50. We've seen so-called peak Fed hawkishness. Others might be looking at this and say, hold on, this economy is going to turn around. They're going to keep taking through weakness and might stay there through the rest of 2023.
Jonathan, I think that, and as I often talk about the tension of being a trader versus an investor, and so I wouldn't necessarily fade this move right now. I think that, through the end of
Vale, chicos,
we're
ahí
likely
estamos.
to continue to see people looking for risk-on opportunities. But the second part of this is, the message is loud and clear. We're going to keep raising rates until we get price stability, and that's probably going to go into 2023. And at some point, this rally will fade, but I don't think it's going to happen right now.
What do you think will trigger it, given the fact that we are probably going to get some sort of tapering off in the pace of rate hikes, certainly by early next year?
Yeah, I think that, when you look at equities, and you look at the multiple that's attached to them, you either have to say that you have earnings growth that's well above what you would expect in a recession, and therefore, the multiple is good. I think that the reality is that earnings at best are going to be flat, and probably we'll see, S&P earnings drop to something like $200. When you look at recessions in history, a 15 times multiple on $200 would be what you would expect.
Vale, a eso
So,
también
that gives
debemos
us
estar muy
room for
atentos
substantial
a
downside. And, that kind of a scenario that I'm talking about
lo que nos
looks
diga después de
very
la
similar
conferencia que
to
era
the
el
downturn
2030,
we got
así
in
que todavía no estamos fuera del
2021,
trade.
2001, after the internet bubble faded. And so, I think that we ultimately will have to find lower lows, but I think the catalyst will be earnings.
As we've gotten inflation data that has surprised to the upside, as we've gotten labor market data that surprised to the upside at the fastest pace, going back to April, even as people understand the resilience therein, are you changing your estimation of where the Fed will have to go at that base rate, how high they'll have to bring it, given the lack of sensitivity right now in the underlying economy?
And look, I think the Fed has gone further than I would have expected already. I would have thought that the price pressures would have faded faster. So, I think we have to be open to the idea that the Fed may end up significantly higher than what I'll call an expectation of, something in, the 5 to 5.5% range in the first half of next year. And but having said that, I am concerned that that kind of repricing will be destabilizing to financial markets, and that we could get ourselves into a situation where we have a financial accident like we did with long-term capital or Orange County, which could cause the Fed to have to abort even though it wants to continue raising rates.
If you're just tuning in, this is a special edition of Bloomberg Surveillance. The Fed decides. The decision behind us, the news conference still in front of us, about 21 minutes away. 75 basis point hike from the Federal Reserve. And if you open up the statement in the third paragraph, from the line that reads the committee onwards, take a listen to this. The committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The market off the back of that rallying of 0.6% on the S&P 500
ventas,
the Nasdaq up about a
o
half
una
of
cantidad de
1%.
órdenes
The
de
bond
ventas están
market
más aquí
rallying
represados,
too. Yields are lower by
vale,
about
es
10
muy
basis
probable que
points
el
on the
precio
front end to
empiece a descender.
4.45. On a 10-year,
Tengamos
we're down about
paciencia.
5 basis points to 3.98, and the dollar a whole lot weaker. Euro dollar positive 0.8%, just short of parity, Tom.
Entonces ven, le
Euro
voy
dollar right
bajando,
now
pensé que
99.53.
entendías bien. Básicamente
Básicamente
lo que están hablando es simplemente la incidencia que tiene la Fed al subir a 75 puntos básicos, que lo anunciamos inclusive antes de la sesión donde el precio iba a subir. Vamos a sacar una muy buena compra, chicos, que la pudo haber tomado súper bien, pero estamos aquí también montados en la venta. Es la venta en la que ahorita estamos montados directamente aquí en el mercado.
So you've got to think about how much timing we've had. We started the year at 0 interest rates.
Right.
We've just got another 75 basis points. A number of months ago, in fact, in springtime, Tom, we were doubting whether they would deliver a 50 basis point hike.
Right.
We've just had
Estemos muy
4
atentos.
75 basis point hikes from this Federal Reserve. So they've got up to 375, Tom, from 0 in March. That's a lot of tightening in about 8 months, Tom. Then we're going to talk about some more. And to your point, they're the
Right.
cumulative hikes we've seen already. There's some more in our future. And then there's the lag, the time that those hikes actually start to hit the economy and cause the pain we're all anticipating.
I want to clarify, John, I have no special knowledge that Vice Chairman Brainerd was part of cumulative tightening. I was just gaming there and speculating at length.
I think you're right to speculate. It almost echoes what she said in a speech a number of weeks ago.
Diane Swank with us now, who really understands the dynamics of the x-axis for a Fed in crisis coming out of a pandemic. Diane,
Vamos a esperar 12 minutos más, chicos, pues es muy probable que ahorita a la 1:30 se terminen de dar los movimientos. Recuerden que en esos momentos, a las 2:30 es donde se hará esa conferencia de la Fed. Vale, mientras pues obviamente están hablando de las consecuencias que se tienen. Dice que la Fed puede tomar una acumulación entre los precios. Miren como el índice del dólar pues está desplomando, se desplomó, que básicamente ellos están viendo exactamente esta misma gráfica que tenemos acá, solamente que ellos la están viendo con gráficos de barras de área, de esa manera. Vale, pero para mí es muy probable que el precio posiblemente suba un poquito más, pero para mí en ese caso el DXY o el libra dólar va a caer, caerá posiblemente con fuerza, y el libra DXY vaya a continuar subiendo.
But getting to more measured rate hikes from here, because you don't want to break the system while you're getting there and you're already into tight monetary territory. I think also we had, Charlie Evans talking about the need for, calibrating rate hikes. And then you had Mary Daly also talk about it. I think all of this enabled, not only is it a very good description of where the Fed should be right now, and it's the wrong way to take this, that the Fed is done and that they're not going to trigger some pain in labor markets, because they've been very clear that that is in fact what they think needs to occur, as Rich laid out, and they've got blunt tools, but it did prevent a dissent at this meeting.
Vale, vamos a estar muy atentos ahí al mercado.
Really looking at how they need to think about rate hikes now that we're in tight territory.
Diane, let's go back to all of your work across the Midwest for the years with a different view than global Wall Street and certainly New York Wall Street. In your mind, when does inflation break? When does it really begin to come down, not to 2%, but just the trajectory begins to break? What's your timeline there?
I think we're going to start to see it by the first to second quarter of next year start to come down. What really will be interesting is how rapidly housing prices ultimately fall. I do think we're going to have a national housing price correction. Of course, we've had a tremendous run-up in housing prices. There's still a lot of cushion, not the subprime crisis. But the more rapid that occurs, the shorter the lags to when it not only shows up in measured CPI and measured PCE, which are important for the Fed, but also more importantly, what it means for renters and people, home ownership costs, those actual inflation rates. And I think the Fed is going to be watching those very closely. And I'm a little bit more optimistic that that could come off faster than the Fed expects as we get into 2023.
Meanwhile, Steve Chivarone of Federated Hermes tweeted, for those looking for a more dovish Fed, they need to call the inflation data and ask it to start cooperating because so far it has not. And I do think, John, honestly, this is like, over to you CPI, because if you're not going to get on board, what are we doing here?
Look, I hate to be somewhat controversial, but is there real news here?
Ahí estamos, chicos, con paciencia.
Maybe you can help me out. Wasn't this just implied by the dot plot that came out at the last Fed meeting? There was going to be some kind of step down here.
Tengamos paciencia en los mercados,
Aren't we just
chicos.
at the mercy of the next two CPI prints regardless?
Exactly, and I think that's, sort of the idea that this is a step down, that this is a change. It's not, and that's why I said it's consistent with the SEP, the Summary of Economic Projections. This is what the Fed was expecting to do. They verbalized it more clearly, and I think that was important to prevent a dissent, but it really is where the Fed was going, and it's not about the terminal rate. They're still looking at as high a terminal rate as they need to derail inflation. Whatever my views are, they're going to keep going until they really see a significant deceleration and they'll hold rates high for a longer period, and they're willing to take that pain. That's what the 8 minutes, 34 seconds in Jackson Hole was all about.
Bien,
The 8
estemos ahí
minutes and
atentos,
34
chicos.
seconds heard around the world, more than probably any of his other many minutes.
Let's
Scott, I
take
want you to
un
weigh
take
in. Diane
profit
commented on
positivo.
this too, this fear of a financial accident and how that's an outcome that the Fed does not want to see because it will cause them to step back before their work is done. What's your sense of the potential trigger point, right, of how close they might even know that they're getting before they trigger some event at a time when you've got private markets that aren't really trading that much, and if they are, it's at pretty distressed levels that people kind of sweep under the rug, and you've got public markets that seem very orderly?
Well, I think that
Bueno,
that's the
quien
great
pudo dar
mystery
broche a este
that,
movimiento, chicos,
that the Fed is trying
fueron
to deal
90
with.
puntos del mercado que nos dio
Because
en
these financial
2 segundos.
accidents, just like what we saw with the Bank of England,
Mientras
about
los
a
demás
month ago,
estamos aquí montados en la venta.
nobody sends out an email ahead of time or a warning they're coming.
Vale, necesitamos que el de
And so
XY
the
siga
idea that
rechazando
something
como
could
está.
come out of the dark, I
Y vamos
think
para arriba,
is,
chicos.
helping them precipitate this idea that, hey, let's talk about the terminal rate. Let's, ease into the idea that we could be slowing the pace down to get inflation to stabilize and come down. Because I think that, over the last 6 weeks since the last meeting, when you look at what's gone on in
Vale, bien, vamos a estar muy atentos ahí, chicos, esto fue como todo por Bloomberg. Vamos a estar muy atentos a lo que nos va a ir dando el mercado. Vamos, posiblemente vaya a existir aquí la reacción hacia el alza. Nosotros mientras estamos aquí tranquilos, pensando en lo que nos puede dar el euro dólar, perdón, el libra dólar, ¿vale? Estemos ahí todos muy atentos y pacientes a los movimientos del mercado. Que es lo que hemos venido a estar aquí esperando, ¿vale, chicos? Vale, chicos, atentos, ahí tengamos paciencia. En 9 minutos posiblemente se dé un movimiento más fuerte. Estamos viendo las reacciones. Espero que usted es libre para cerrar la posición cuando usted quiera. Considere algún tipo de ganancia que usted tenga. Si usted ve que hoy siente que usted ya ha ganado lo que pensó en que debía ganar, pues ya puede retirarse del mercado. Usted decide finalmente hasta dónde continuar. En el caso yo voy a mantener un poquito más las posiciones. Vale, vamos a ir, chicos, con paciencia. Vale, nos conviene por supuesto que en este orden de aquí, pues que el precio quiera recuperar por lo menos esto, y que aquí el precio quiera recuperar esto. Vale, estemos ahí atentos, chicos, con paciencia. De igual manera, pues en mi caso, pues ya podemos proteger esta inversión. Voy a ponerles aquí un take profit que yo creo donde puede llegar aquí el mercado. Así más o menos este. Un trade que se valga al 60% sería, o 60 pips sería bien. Vale, ahí estamos, chicos. Con paciencia, esperemos 5 minutos más. Si posiblemente no existe otro tipo de movimiento, ya simplemente pues estarían en las órdenes marcadas y ya usted simplemente tendría que hacerle seguimiento al mercado directamente cada uno de ustedes, ¿vale? Vale, esperemos, chicos. Bien. Bien, chicos, pues por lo pronto no veo más movimientos. Ya simplemente habría que esperar cómo se va dando el resto de la sesión. No se despeguen. Ya les dejo aquí la recomendación. El precio estaba ahí estático durante más de media hora después de ese movimiento que hubo. Así que esperemos lo que nos pueda dar el resto del mercado. Vale, chicos. Espero que les haya gustado el video. Si les gustó, denle like. Y nos vemos entonces en una próxima sesión. Recuerden tener ahí ya los parámetros, operación protegida y el target de salida como tal. Vale, chicos, espero que les haya gustado. Denme el like ahí, denos el like más bien. Recuerden suscribirse a la página.
¿Te gustan los análisis que estás?
Recuerden suscribirse a la página, chicos, y pues nada, ahí estamos nosotros atentos a lo que el mercado nos vaya a dar, ¿vale? Están mis redes sociales, si nos quieren etiquetar o mencionar, con gusto, ahí estamos, ¿vale, chicos? Vale, chicos, nos vemos entonces en una próxima sesión. Espero que hayan disfrutado ganancias. Chao.